Every economy runs on trust. Not only trust in government, not only trust in currency, but trust in the institutions where people keep the money they work for. And that trust begins to weaken when citizens increasingly feel that banking no longer preserves value, but gradually reduces it through layers of charges, fees, deductions, and service costs. Because modern banking is no longer judged only by whether money can be deposited. It is judged by whether that money remains meaningfully protected over time. And for many ordinary Nigerians, that question is becoming harder to ignore. This is the mailman, delivering truth to power, one letter at a time. Hello there. You're welcome once again to the mailman, the platform where letters are written to power and accountability is made unavoidable. This week, we turn our attention to one of the most important trust systems in any modern economy: the banking and financial services industry. Today's letter is directed to the leadership of Nigeria's commercial banks, merchant banks, financial institutions, and the broader regulatory architecture operating under the supervision of the Central Bank of Nigeria, CBN. Because beyond policies, balance sheets, and compliance structures, banking ultimately affects everyday human life. Distinguished chief executives and leaders of Nigeria's banking and financial institutions, you've got mail. I write to you today not as an outsider to the financial system, but as someone who has operated within its structure across the retail banking, commercial banking, and corporate and investment banking environments. Now, from that vantage point, I understand both the operational realities of financial institutions and the expectations of customers who trust those institutions with their money. Because banking is not merely a commercial activity. It is a public trust infrastructure, a system built on the understanding that money deposited today should remain reasonably protected tomorrow. And when customers begin to feel uncertain about that promise, the issue becomes larger than ordinary complaints. It becomes a matter of public confidence. There was a time in Nigeria's banking history when banking was largely understood as safekeeping. People deposited salaries, people saved money, people expected balances to remain relatively stable unless withdrawals were made. Over time, however, the banking system evolved. Digital banking expanded, electronic transfers increased, mobile banking emerged, and service channels multiplied. Fee structures became more layered and transaction-driven. This transformation mirrors changes that occurred across modern financial systems globally. Banking gradually moved from a simple custody model into a service-based revenue model. That evolution itself is not the problem. The concern is what many customers increasingly experience as a result of it. Today, banking no longer feels passive. It feels continuously active. Every transfer, every SMS alert, every maintenance fee, every digital interaction, every service layer, each charge may individually appear CBN compliant, operationally justified, and contractually disclosed. But collectively, many customers increasingly experience banking as a system of constant deductions. And that perception matters. Because trust is not built only on legality. Trust is also built on lived experience. To properly understand this issue, it is important to examine how similar realities are managed in other financial systems. Under the FCA fairness model in the United Kingdom, banking conduct is regulated by the Financial Conduct Authority. Over time, regulators introduced reforms aimed at reducing excessive customer harm within retail banking. These reforms included simplifying overdraft pricing, reducing multiple penalty fee stacking, and introducing stronger consumer duty obligations that requires banks to deliver fair value outcomes to their customers, and increasing transparency around cumulative customer charges. Importantly, UK regulators recognized that even technically disclosed charges could still become unfair if customers could not reasonably understand their cumulative impact. Now, while banking charges still exist in the UK, sometimes at significant cost levels in borrowing situations only, the regulatory emphasis increasingly focuses on 1. Transparency, 2. Fairness of outcome, 3. Simplified fee visibility, and customer protection against excessive fee complexity. In South Africa, under the South African Reserve Bank SARB framework, banking systems operate with clearer tiered account structures and published pricing models. Fees are generally more visible and standardized across institutions. In addition, entry-level simplified banking products have increasingly emerged to support lower-income users and encourage financial inclusion without excessive cost burdens. However, concerns still exist regarding the cumulative impact of repeated microcharges on lower-income and high-transaction users. In other words, South Africa demonstrates that transparency alone does not automatically eliminate customer frustration if cumulative costs remain heavier over time. In Ghana, under the Bank of Ghana framework, banking charges are regulated and publicly disclosed across institutions. Maintenance fees and transaction charges are common features of the system. However, customer concerns still arise around predictability of deductions, consistency of customer experience, and the gap between formal disclosure and practical understanding. This shows that disclosure alone is not always enough. Customers must also feel the system remains fair, understandable, and proportionate in everyday use. What becomes clear across these jurisdictions is this: bank charges exist globally, and Nigeria is not unique in that regard. However, many advanced and reform-oriented banking systems increasingly place stronger emphasis on transparency of cumulative charges, simplified fee structures, fairness of customer outcomes, and protection against excessive erosion of small or inactive balances. In practical terms, customers in those systems are generally less likely to experience the kind of prolonged and layered balance depletion that many Nigerians increasingly describe in everyday banking life. So, the issue is not whether banking charges should exist. They will always exist. The real issue is whether the structure, frequency, cumulative impact, and customer protection surrounding those charges remain fair, proportionate, and trust-preserving. There is also a reality widely discussed among ordinary Nigerians, sometimes humorously, but with very serious underlying implications. It is the idea that a person could deposit a modest amount, say 100,000, into a savings or a current account, and say that amount becomes inactive for a prolonged period, maybe due to travel, relocation, schooling, illness, economic hardship, or other legitimate life circumstances. And he or she then returns months or years after, only